Assalamualaikum warahmatullahi wabarakatuh. Welcome back to the third annual Islamic Finance Conference 2018. And now we will continue this conference in session 2. First agenda of session 2 is guest lecture from Professor Dato Asmi Omar, President and CEO ENCEF, with a topic of balancing innovation, competition, and consumer protection for financial services institution in digital era. After lecture, the conference will be continued by panel session 2 with the topic of fintech, Islamic finance, and regulatory issues. The speakers for these sessions are Professor Dato Azmi Umar, President and CEO ENCF, with a topic of regulatory framework on Sharia-based fintech current issues. Ameriza Ma'ruf Musa, Deputy Director Bank Indonesia, with a topic of regulatory sandbox and payment system in Indonesia. Sarjito, Deputy Commissioner, Otoritas Jasa Keuangan or OJK, with a topic of fintech and consumer protection in Indonesia. And Muhammad Sani bin Muhammad Ismail, Senior Financial Sector Specialist, ASEAN Development Bank or ADB, with a topic of regulatory issue in financial technology. Ladies and gentlemen, from 4 Points Hotel Makassar, South Sulawesi, this is the third annual Islamic Finance Conference, Session 2.
Welcome back, distinguished guests, ladies and gentlemen. We kindly inform that the evaluation form of the third annual Islamic Finance Conference is available online or could be obtained from the front desk. Please give evaluation and feedbacks by filling the evaluation form, and we would really appreciate your valuable suggestion for a better arrangement in the future. The next session is guest lecture, Balancing Innovation, Competition and Consumer Protection for Financial Services Institution in Digital Era, presented by Professor Dato Asmi Omar, President and CEO of INSIF. Please give round of applause of Professor Dato Asmi Omar.
Where do I point for the clicker? Okay. Okay. Thank you very much. Bismillahirrahmanirrahim. Fellow speakers, chairperson, moderators, my dear friend, Abayomi, professors from a number of universities, from Ministry of Finance, from Universitas Hasanuddin, from local participants, Assalamualaikum warahmatullahi ta'ala wabarakatuh, and a good afternoon. I know this is not a good time to have a talk, particularly by one individual, because all of us will be happy nodding our head, because not that we agree, but because we are sleepy. Okay. But first, let me thank the organizing committee, particularly the Ministry of Finance, Fiscal Agency, for inviting me to share my thoughts on this topic of balancing innovation, competition, and consumer protection for financial services institutions in digital era. as being mentioned earlier on by the other speakers, let me talk a bit about INSEAF first. I used to work in Islamic Development Bank before, and then now I came back late last year to INSEAF. INSEAF is a university established by Central Bank of Malaysia, dedicated for Islamic finance. So we focus only postgraduate program, masters and PhDs on Islamic finance. So the area of Islamic finance has been my area since the 80s. So I've been working, researching, and also advising individual companies as well as countries on Islamic finance. So let me go to the topic at hand. If you look at the fintech as being mentioned earlier on, it is growing very fast. According to the World Economic Forum, it is growing at a steady rate of 10% per annum, fintech. So it is an area that has captured many interests, including, of course, Indonesia and many other countries. What we can also see is that the investment in fintech in Indonesia and many other countries are increasing. There's a lot of investment going on into startup of fintechs, as mentioned also earlier on. And we see this is an opportunity for disruption, because fintech create disruption to the economy, to the financial sector. But it has certain advantages, as we can see. It is being mentioned also, it is cheaper, okay? It provides you a cheaper alternative. It provides you a more efficient solution, in a sense that it is able to bring more people into the financial sector, as we know. And as you can also see in Indonesia, because of fintech, many individuals who were not banked before, who were not able to participate into the banking sector or the financial sector, are now able to go into this financial sector because of fintech. So nobody would disagree that fintech create what we call problems to the financial sector. It helps the financial sector generally. However, let me go on to what we say, what drives the fintech. In many countries, one is technology, the use of mobile phone. And in some countries, people have 2 or 3 mobile phones. Because of the usage of mobile technology, fintech is able to expand into different sectors. Unlike if you see in a number of countries where the limited access to banking, because banks do not have branches in certain rural areas, yet mobile telecommunication are available in many other areas, including rural areas. As a result, people now have access to fintech applications, be it in the context of banking, remittances, and so on. Secondly, what drives financial technology growth is the consumer expectations. People are not happy with what the bank is offering, so fintech provide the opportunity for individuals to have access to certain banking facilities that is easier, that is cheaper than the banking system itself. The third factor is, of course, demographics. In many countries, you have more young people below the age of 35, okay, below the age of 35. You can see this in Indonesia, you can see this in, say, for example, in Malaysia, Southeast Asia generally, you can see in Thailand, Vietnam, Cambodia, where the bulk of the population, about 40% of the population comprises between the age of 15 to about 35. And they are the one that is driving the growth of financial technology of fintech. So millennials is the one that is driving the demand for fintech. And in many other countries, you have the growth of young Muslim population. The young Muslim population is expanding, the Muslim millennials. They are the one that is expanding. They are the one that is demanding the applications of financial services using technology. And the use of technology has become more pervasive. Let me share with you also, for example, in many countries now, if you look at who are the most group of people who are able to implement or absorb these new technologies, it is the individual millennials that are using this technology. So that's why you see that in many other new businesses, the target is always the young millennials. They are the one that makes the changes. Let me give you another example. For example, I come from Malaysia. You see, for example, the recent election in Malaysia, you see the results of the election. Most of the changes was due to the young people who make the changes, who vote for change of government. So it is the millennials that are making the changes. So what we are saying is that the drive and the demand by the millennials are the ones that are providing the opportunities for fintech companies to fulfill this demand. And of course, investment in fintech is another area. There's a lot of demand for fintech funds. Investors are looking for opportunities to invest in fintech application companies. So this is a great investment as another way to get high return. So you see there is a lot of investment going on. I will not dwell into statistics because these are commonly available and being mentioned earlier on. Then, of course, the aftermath of global financial crisis. You see there is a lot of, because of the global financial crisis, there is a less trust on the financial sector, so people are looking for alternatives. So this alternative is where it drives the fintech industry. And of course, the growth of e-commerce. Like, for example, in China is the Alibaba in China. And in many other countries, you have either homegrown or something from outside that is promoting the e-commerce. What I wanted to show just in a short, just to show, purposely I did not show Indonesia, but just to show Singapore, because Singapore in this region is the most advanced in terms of fintech. And Singapore has positioned itself as the fintech capital, at least for Southeast Asia, fintech capital. So you have a very comprehensive fintech map in Singapore. You have payments, fintech companies. You have blockchain, cryptocurrencies. You have insurtechs, the insurance tax. You have lending companies, the P2P lending. You have data management. You have investment wealth management using the robo-advisors. You have the chatbot. You have the remittances. You have personal finance. You have digital banking. You have crowdfunding. You have API. You have currency exchange platform. And you have comparison sites. And you have RegTags. So altogether, as of November 2017, Singapore has 210 companies. If you compare this with many other countries in this region, Singapore is the most advanced in terms of the fintech industry. As we said, what are the concerns now? Looking at the development, there's a lot of demand from millennials, from banking and so on, so there is a lot of demand for the fintech. But what are the concerns? As we know, of course, from the banking side, banks are concerned about the fintech because it will eat up their profit, it will eat up their market. So as a result, you see what has happened, as been mentioned earlier on, bank is partnering with fintech companies. So rather than you compete against fintech companies, you partner with fintech companies. So that's one approach that banks are doing. And you can see this in Indonesia, Singapore, Malaysia, okay, and in Thailand as well. But then, moving ahead, what are the regulatory issues that are of concern to regulators? We know that we need to protect consumers. We know that we want to maintain financial stability. We also know that we must ensure that regulation in terms of risks are being taken care of. However, we also know that in many countries, fintech regulation is still at the early stage. Okay? Fintech regulation is at the early stage. It has created a lot of positive things, but it can also lead to a lot of negative impact to the economy. I'll give you one example in the context of fintech. The first issue that is of concern to regulators and also, of course, for consumers is the issue of data privacy and security. You notice that when you want to use certain applications, fintech application, you have to agree on something. And that agreement, basically, you are giving your personal data to them. And how they use your data for other purposes. So the question now is, to regulator, is the question of how do you protect data privacy, data integrity, and it's not being used for negative purposes. Okay. For example, when you open a fintech application, an account that is linked to a bank, basically they will be able to access also your data from the banking sector, from the bank itself. That will create your data privacy. So that's one issue from a regulator's point of view. How do you protect data privacy and data security? And we have seen whereby because of the use of fintech and data openness, individuals are able to access personal accounts and use those money for negative purposes. That's one. Another factor that we need to consider is we say that fintech bring you financial inclusion. Why fintechs allow financial inclusion? People were not able to go into a bank before because the bank is far away, but now having fintech, you are able to go into a banking sector through a digital bank or through microfinance and so on. So you have the term called financial inclusion. But we also have the negative effect of the, fintech. What do I mean by financial exclusion? Okay? What I meant here is this, the financial exclusion. Because of data mining, because of using big data, certain individuals may not be able to get products offered by fintech companies because they know who you are. They have been able to mine your data. They look at your social profile. They look at your Facebook, your Twitter account, whatever account, and because of that, they refuse a product to you. As an example would be, suppose you have InsurTech. Insurance provide e-insurance to you, okay? But because of your profile, they will reject you when you apply for e-insurance. Okay, so how do you then balance as a regulator where data is being used for purposes to reject the application because, not because of financial, but because of the social behavior of the individuals. Let me digress a bit by, as I was talking during lunch with my friends, a book that I read about a few months back. This relates back to the issue of financial inclusion, a book that is titled, Everybody Lies. Everybody Lies. It's a very apt title book, Everybody Lies. The book talks about when you receive a survey form, right? What you will do is you will tick, and you will not reveal yourself. You just tick, choose between 1, 2, 3, 4, 5, you will just tick. The one that you think, others want you to think. But the book also says that by studying your Google search, they are able to know what you like, what you dislike. Because when you go for Google search, you are not going to cheat. You are revealing yourself about what you want. Okay? But in survey, you will not do that. So what the author is saying is that using Google search by individual, it helps to create a profile about that individual. Okay? It is good or bad, that is an issue where regulator has to see. If it is used for negative things, then it will have a great impact. Secondly, which is also related to, for example, Indonesia, when you have the financial technology firms providing financing, P2P financing, or P2P lending, do you regulate the interest rate being charged? I've seen in UK study, they charge 1,509% per annum under P2P lending. P2P lending, the interest rate is 1,509%. Just imagine, the interest is being charged because it is not regulated. So what we are saying is, again, this must be looked at, regulated from the perspective of customer protection. Then, of course, the other component is a lot of regulators are talking about the anti-money laundering, terrorism financing, the impact to liquidity risk to the financial sector, and the volatility of bank funding, the operational risk, systemic risk, as well as liabilities from fraud and other activities. For example, when we use fintech application, if there is a fraud, who bears that responsibility? Is it the fintech company? Is it the fintech platform? Or is it the bank that provide the mechanism for financing? Is it the customer? So this issue has to be addressed as well. So what I am saying is that all of these issues, to a certain extent, some countries have addressed partially through sandbox regulation, but again, it is not a comprehensive regulation. So this is something new, something being developed. So the strategy is, of course, from the context of a regulator that looks into account the financial stability, that looks into account the consumer interest, is to learn from the others and emulate them into a particular practice. I know Indonesia is also looking at this, but at the end of the day, it's more of taking into account the basic principle. Then in relation to Islamic fintech, is Islamic fintech going to create financial instability? At the moment, the answer is no. The answer is no. Islamic fintech is not going to create financial instability at the moment. Why? Because they are small. They are small. I think once they are big, then they will create financial instability. So at the moment, even in Indonesia, Malaysia, and many other countries, even GCC countries, Islamic fintech is still small. So to the regulators, it is still not significant. Okay, still not significant because the size is small, the amount of money in the fintech is small under the Sharia compliant fintech. But once they are big, then there's something, it has impact on financial sustainability as well as financial stability. But in the other aspect, irrespective of whether they are big or small, consumer protection is very important. And consumer protection, irrespective of whether Sharia compliant fintech or conventional fintech, this is an area that regulators must look at in order to protect. So bringing about this idea of what we say, maintaining data privacy and security, the issue of financial inclusion as well as financial exclusion, the use of data mining and price discrimination, interest charges and so on, are important components that have to be looked from the perspective of consumer interests. As a short note before I conclude, data mining is a very important component. However, as we said earlier on, the issue of privacy is very important to be protected at all times. At the end of the day, consumer interests as far as privacy, security is very important, it's paramount to the regulators as well as to paramount to the individual consumers. So with that note, I thank you very much for my short presentation because more of it will be elaborated in the next session when we have the panel session. Again, thank you very much. Wabillahi taufiq wa hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Professor Dato Asmi Umar, for the lecture, and please remain on stage for the next panel session. Continue to our next session. We would like to invite you to the next panel session, FinTech, Islamic Finance and Regulatory Issues. The session will discuss regulatory issues on Islamic finance and financial technology. During all the panel session, I would like to remind all participants are able to post comments, polling, questions via Slido and input with hashtag AIFC2018. Selected online comments or question will be discussed by the panelists. Participants are also welcome to ask or to make comments during the live session. And this session will be led by our discussion chair, Khalil Roters. Khalil Roters will lead the next discussion panel. Khalil Roters is a senior advisor for Prospera. Previously, he served as a chief economist Mandiri Sekuritas, CEO Pevindo, and chief economist Danareksa. Please welcome Mr. Khalil Roters.
Should I call the speakers? Oh, okay. Dato Asmi is already with us, and I'm sure he doesn't need any further introduction. Another speaker will be Mr. Sani Ismail from the ADB, please. And then we have Mr. Amiriza Maruf Musa from the Central Bank. And lastly, Pak Sarjito from OJK, from the Financial Services Authority. Professor Dato Asmi, I think, is very well known to us. As I mentioned, he doesn't need further introduction, but currently he's the CEO and chairman of InSafe in Malaysia. Mr. Amiriza, I'm sorry I don't have your bio. Maybe you want to introduce yourself at a later stage. Mr. Sani Ismail is currently the senior financial sector specialist at the ADB Asian Development Bank and currently posted to Jakarta, helping the Indonesian government. Mr. Sarjito, currently Deputy Commissioner for Education and Consumer Protection, or EPK in Bahasa, of OJK, the Financial Services Authority. I think Mr. Sani and Mr. Sarjito would not need further introduction because they are very well known in financial circles in Indonesia. So today we are very lucky that we had good keynote speeches from several prominent speakers, and the previous session in the morning was very illuminating for us. But now I think we come to the very important point of the regulatory framework. Yeah, because a lot of issues have been developed by many speakers. Previous speaker from McKinsey mentioned consumer protection, financial stability, risk infrastructure, and Professor Asmi also elaborated on this. And we have very prominent speakers who are regulators themselves who can address this. I think Dato Asmi would want to continue his previous speech and illuminate the regulatory framework that you think are pertinent. In all, I think we have 90 minutes. Is that correct? We have 90 minutes, right? Altogether. So maybe 15, 20 minutes if you like. Yeah, I think that would be a good idea so that we can have an exchange of information as well, right? So please, Pak Dato. Sure, please, feel free.
Can I get my slide? I just want to go into this. Yes, 2 slides only to be used. Again, thank you, Mr. Chairman. And again, thank you, the Minister of Finance, my fellow panel members, ladies and gentlemen, Assalamu alaikum, and good afternoon. The focus that I want to look at is in the context of Sharia-based fintech issues. What are the products, as we mentioned earlier on, the products that we have are payment solutions, fintech based on payment. You have remittances, you have wallets, digital wallets, you have crowdfunding, you have P2P lending, you have currency exchange, you have insurtech, you have the artificial intelligence. One example is the robo-advisors. And then you have the blockchain and distributed ledger technology. You have cryptocurrencies, mal or token, and I remember seeing some of the questions being raised earlier on. Then you have smart contracts. All of these are new, and we also have Sharia scholars here who have done some work in these areas. Let me just go on in the principles that, for example, if you look at Malaysia as an example, the closest what Malaysia did in terms of regulation for fintech is the principles that everything in fintech must be Sharia compliant. Okay, everything in fintech must be Sharia compliant. That is the basic principles. Okay, but again, people will ask, when you say Sharia compliant, what aspects do you look at in the context of fintechs? Because fintech, you have so many things, as I mentioned earlier on. You have digital wallet, you have P2P lending, you have currency exchange, you have remittances, you have Bitcoin, you have blockchain technology, smart contracts, and so on. So which one are we talking about? Well, we can spend time to look at each and every one of them. That would be, an issue. But let me just pick up something in the context of what Malaysia Securities Commission did, is for the purpose of crowdfunding and P2P lending. Okay, crowdfunding and P2P lending. What it says is that the crowdfunding that is based on Sharia must have a Sharia advisor and disclose the name of the Sharia advisor by the platform operator when an Islamic capital market is offered. Okay, and the role and responsibility of the Sharia advisor is rather comprehensive, and it includes providing Sharia expertise and guidance on all matters, particularly in documentation, structuring, and investment instruments. Secondly, is ensuring the applicable Sharia rulings, principles, and concepts endorsed by the Sharia Advisory Council of Malaysia, applying ijtihad to ensure that all aspects relating to the offering of Islamic capital market products are in compliance with Sharia, and in the absence of any rulings, principles, and concepts endorsed by Sharia, meaning that to apply ijtihad, and where applicable, issue a Sharia pronouncement which must include the basis and rationale for the pronouncement, the structure and mechanism of the Islamic capital market product, and the applicable Sharia rulings, principles, and concepts used in the Islamic capital market product. That is the regulation thus far. If you notice, it's only for crowdfunding and P2P financing or P2P lending. What about the others? I'll give you an example. Because in the context of crowdfunding in Malaysia, the Sharia-based crowdfunding, there are only 3 in Malaysia that are licensed. Only 3, okay, in Malaysia. Of course, more will be coming up in future. But the key things that we look at is not only the appointment of Sharia advisor, but once a client, a customer, or investor puts into money, how do you ensure this throughout the whole operation of the company, it is still Sharia compliant? You see, one is we are talking about the financial products that is being created by a fintech company for crowdfunding purposes. The product is, say, for example, to invest in this particular company. And this particular company, the structure of product is Sharia compliant. But then, throughout the project itself, let's say it is a 3-year kind of equity, whether the company is Sharia compliant along the way. This has not been addressed to even in the context of Malaysia. If you notice, the focus is only look at the application. The structure is Sharia compliant. There is a Sharia advisor. The documentation is Sharia compliant. So these are okay. Therefore, it is Sharia compliant. But then the question would be, throughout the whole process, how do you ensure that Sharia compliance takes place throughout the whole duration? I'll give you an example. You know, in the context of fund management, in fund management, what we have is a company will be initially put in the Sharia compliant list, and subsequently, if the company is not fulfilling the negative screening, then the company is dropped from that list. You know, so you have that requirement. So a company will be evaluated periodically. It could be in some index used quarterly, some used semi-annually. So there is a continuous evaluation. But in the context of crowdfunding, P2P financing, this is only addressed at the beginning when the company first issued the product. But during the duration, it's not stated. Okay, it's not stated. So this is a gap that what we're saying. So this has also to be addressed as well. Okay. The other one issue is the issue of people raise question about what about the Bitcoin? Okay, what about the Bitcoin? Cryptocurrencies. Well, very interesting debate. If you have been following the debate, some would say it is not Sharia compliant, partly because of the volatility, trading, and so on. I remember the debate about Bitcoin has similar analogies to the debate about equity investment way back in the early 80s. If you are old enough, some of you would know that in the early 80s, the debate was investment in stock, in shares, not Sharia compliant. Why? Because people speculate in the stock market. Therefore, stock is not Sharia compliant. But subsequently, the focus is on stock per se, not on the behavior of the investors, because you differentiate between behavior of the investors and the instrument itself. So the conclusion towards mid-80s, yes, stock is okay, equity investment is okay, but you have to sort of look at the behavior of the investors in terms as far as speculation is concerned. To a certain extent, it is quite similar now to the debate about Bitcoin. But Bitcoin, again, the debate on Bitcoin is similar to equity is it mal or is it token? There are Sharia scholars who took their position, it is mal, therefore it can be traded. Some people took the other position, says it is not allowed under Sharia. So it is, as we say, the conclusion is out there and it's still being debated until today. But of course, a number of countries have approved Bitcoin or cryptocurrencies. Many other countries have yet to approve or do not approve the use of cryptocurrencies. Then we move forward, which is related to the issue of Bitcoin. Again, the issue of, I will go back to blockchain. Is blockchain Sharia compliant? It is a technology. There is a lot of interest to use blockchain, so much so that now blockchain is being used for the purpose of developing zakat, wakaf applications. And as you know, International Red Cross, Red Crescent has implemented blockchain for the purpose of zakat for refugees. Okay, so again, blockchain is seen to be neutral. It is a technology, and it has applications for Islamic finance, and it has been used already. A company in Malaysia called, there's a company in Malaysia that is using blockchain to develop wakaf. So blockchain is something that is seen to be neutral, has limited Sharia issues, and it's being promoted by many countries and individuals and companies. However, the application of blockchain in cryptocurrencies is being debated until today. So to conclude, we have the issue of crowdfunding P2P. There are certain regulations that are being put forward to ensure it is Sharia compliant. But at the same time, how do you ensure that throughout the whole duration of the investment, it is Sharia compliant? This has not been addressed, even in the context of Malaysia. Then, moving forward in the context of blockchain, blockchain is acceptable so long as it is, for example, it can be used for zakat, wakaf, and so on. But the application of blockchain in Bitcoin is an issue to be debated. I think those are my thoughts on this particular topic. Again, thank you very much. Assalamualaikum.
Thank you, Dr. Asmi. Maybe we can follow up by Pak Sarjito first, or Pak Amerizo. Maybe Pak Sarjito first, please. Ya, Pak, silakan Pak.
Assalamualaikum warahmatullahi wabarakatuh. It's a tough time actually after 2 p.m. and we are talking about a topic which is complicated. I once attended a fintech conference and I saw most the audience did not really concentrate because the topic is esoteric and difficult and using English. Today, I'm not going to talk about the fintech as a professor just inform you a lot about the fintech and how it operates, but more focus on the consumer protection. Let me give you a bit Indonesia at glance, which is we have 258.7 million population. We are number 4 in the world. And hopefully, in terms of prosperity and justice, we should be at least number 4. And with this amount of population, we have around 143.2 million having access to internet, and surprisingly, around 326.3 million mobile subscriptions, which is most of the time we individually have more one than mobile phone. In terms of the fintech market, we have only 36% adult who have an account in formal financial institution. As we might aware of on our survey, our literacy is still low and our inclusion is still quite low. And we are hoping on 2019, our inclusion should achieve 75% as mandated and ordered by the President. And we realized that we have more than 50 million small medium enterprises in Indonesia, and 70% of all SME sectors do not have access financing through the bank. This is, of course, quite huge. The next picture would be the fintech companies' growth, which is quite robust. And approximately 235 fintech companies in 2017. And we have 174 fintech companies registered as a full member of Indonesia Fintech Association, and 148 startup and 26 formal financial institutions. And of course, because most of the economic activities in Indonesia concentrated in Java Island, and we see here 60% financing activity also happened here in Java Island. And we have a data also that 48% of the adult population in Indonesia have actually have an access to the formal financial services. But most of us actually tend to borrow money to family and friends, not to the bank. And this is also being discussed many times, that Indonesia has a quite high intermediary cost. As you could see in the pictures, Singapore is quite low with only 1.85%. And Thailand probably the highest, but we, Indonesia, is only slightly lower than Thailand. This is, of course, become an issue. Why that the intermediary cost in Indonesia is so high. With the advance of technology, we have debt crowdfunding, which is we, at the OJK, we know as a P2P lending, and we have also equity-based crowdfunding that the regulation is underway. We have data per May 2018 that we have 51 startup-related financial services registered at OJK, not licensed. And there are conventional and also one Sharia fintech registered. What is actually the fintech opportunity and challenges in Indonesia? As you could see, as I mentioned before, the low literacy index in Indonesia, and we have 13,000 islands, which is even OJK offices, not in all places, which is not easy for the, if you could go around Indonesia, so many islands, even if you once go to Ternate, Tidore, you could see not easy for society to get an access to the bank and to the financial institution. So we have also very vulnerable to the what they call the illegal investment scheme. One day I spoke to one of the community that surprisingly in that community asked me a lot about the cryptocurrency, about Bitcoin, and I started to invest in Bitcoin, sir. And I was asked a lot about the Bitcoin and stuff. You know what? From where actually they understand what the Bitcoin and cryptocurrency? From the web. They're reading. Even for something very sophisticated, it's not easy to understand, even for those who has an economic background or even other, financial background. And we also in Indonesia, our people still rely on what we call loan shark. Loan shark, as you understand, shark, which is known in Indonesia as rentenir, which is so many rentenir. If you could see and you go into our society, that loan shark everywhere, they impose you very huge interest, unbelievable. Per day could be a certain percent, but I feel, this very easy. It's a matter of liquidity, because the bank closed at 5, and if you need money at 8 o'clock in the evening, so you need to go to the loan shark, and very liquid and easy to get money, but it kills you in the long term. A fintech lending also basically because it gives an access to the society, so it supports the government inclusion program. And a fintech has also heard from the professor that actually in collaboration also with the formal sectors, which is not the opponent in some way, could be a friend. And of course, by fintech, for those who are unbankable, who has no access to the bank or formal institution, they can get an access through the financial institution, which is with digital financial institution, which is a fintech. And the thing is that beside of the investors here in Indonesia, there are huge potential foreign investors that would invest in Indonesia through fintech. Little bit to just remind us that what is different between loan shark and P2P lending. Loan shark, as I mentioned before, is a common practice in our society for those merchants or small people who make a business. They borrow the money and they have to pay every day, every month, and it's a huge interest. This is unregulated, unfortunately, and the interest is very high. And sometimes, if you don't comply to pay, and there is a debt collector, which is a horrible debt collector, and this is become an issue in Indonesia. Even formal institutions also sometimes are using a debt collector, which is not as we regulate. And then I would like to show you also what is the fintech lending product in Indonesia in rather quick. As Professor mentioned also before, that what is actually the cap to regulate also the cap, also the interest, the amount of the interest that they can impose. As you could see from the data for the ASME financing, 5% to 30%, but in practice, according to the association, they actually charge at average is about 20% and even more. So meaning if you impose a 20% interest rate, so you need to have a margin which is higher than that. So you must have a good business to have such interest rate. For short-term micro loan, we still found that per day, per interest is only 1%. So if 1% per day, you can count. How about even in a year? So it's still huge. What is actually the consumer protection aspect? For the P2P lending, who are consumers? Are they the lenders? Are they the borrowers? Or the fintech platform? According to HOK rules, that fintech platform is also considered as the financial institution, which must be registered with the OJK. So lenders could be consumers in some way, and borrowers also the consumers. And the problem of that for the fintech platform, I would like to give you a little bit of our finding, because I have 4 minutes left on that. Our finding on the consumer protection aspect of the fintech. How about the transparency? This is the first issue. The thing, as we found that sometimes the fintech platform is not that transparent to the consumers, which is sometimes they don't talk about the burden that the consumers oblige, and they have to pay for a certain amount of money and things. How about the reliability? This is also the issue. How about the secrecy? As mentioned before, the data secrecy is the big issue. Sometimes the P2P platform order other parties to collect the data, which is not, the party work on behalf of the P2P platform, but how can we trust this party that they don't, they are not going to leak the data or use the data? So in the advanced technology, this has become an issue that secrecy is become less and less. How about the reliability? Some P2P platform also, use different type of technology. Sometimes we consider it's not safe. Some of them are good, but some of them are not. So there is no uniformity in these things. How about the fair treatment? We also found that there are unfair treatment for some time. So our finding, based on our market intelligence and our finding to the P2P lending samples, found that there are some issue of the consumer protection. How about the standard of contract? Some contract use exonerate clause, which is heavy to the P2P, heavy to the platform, not to the consumers, which is actually the OJK want the right and the obligation of the consumers and the producers must be in balance, not heavy on the right or not heavy on the left. So this is and also consumer data loss, as I mentioned you before. And how about the system reliability? As I mentioned before, some of the system is still not that sophisticated that we question on the reliability of the data. Anyway, I think I almost hit the time of 15 minutes, so would be happy if you have some question later on. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Sarjito. Maybe we can continue with Pak Sani, and then, Bank Indonesia first. Oh, please.
Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, distinguished speaker. First of all, I would like to thank to the steering committee for inviting Bank Indonesia as one of the speaker in this panel. And I am here for representing Bapak Oni, our Deputy Director of Payment System Policy Department. He sent his apology for not coming to this event today. This afternoon, I'm going to talk about Payment System Indonesia and also Regulatory Sandbox. As you can see in the slide number 2, I'm going to talk about the payment system, about the current condition, financial technology, and the role of Bank Indonesia. In the second part, as steering committee asked Bank Indonesia to talk about is about regulatory sandbox. I think regulatory sandbox is many interesting topic to discuss. As in the morning session, the speaker reissues about this the importance of regulatory sandbox for promoting fintech in Indonesia. And the last part, I want to talk about the digital economy. In this, on the slide 4, we realize that the technology is the market driven for the development of fintech, fintech industry. Starting from the invention of the semiconductor and also microchip, the finance industry can produce the new product as we call it credit card. And as we know that the next in the 1970s, there are new invention, there is a mainframe. There's this invention of this technology also support industry to produce a new product in their financial sector, like messaging, automatic teller machines, and also electronic trading. And it is interesting to discuss about the current and the newest technology in financial market, especially in fintech industry. As Professor Dato also mentioned about the issues, one of the issues is about the blockchain or distributed ledger technology, and also there is cloud computing, and also cognitive computing. And the latest, last month I joined with the seminar about the cybersecurity, and many industry now is researching about the face recognition. So it is also the new technology that should be addressed. Quantum computing and also AI, artificial intelligence, and also learning machine. In the slide number 5, in Indonesia, especially for the millennial or young people, if the daily life is closely related to the fintech application. For the travel industry, there is like Traveloka, and also in lending activity, and many young people also join with the applications such as Modalku, like a crowdfunding application for lending activity. And also many applications that can be used, that the millennial can be used for their business activity. Fintech, on the next slide, we realize that there are many benefits that we can get from by using this application. From the point of view of the customer, fintech has more product to choose, and also improve quality of services, cheaper price. From the point of view of industry, it is surely that financial technology also can simplify the change of the transaction, increase in capital efficiency, and also accelerating the flow of information. And from the point of view of the economy as a whole, financial technology, of course, can be accelerating monetary policy transmission, increasing speed money in circulation, and also economic growth. As we know that if we refer to the theory of money quantity theory, if the money in circulation is grow more rapidly, it can create the benefit to the real economy. And we can jump to the slide number 8. Maybe many speakers in the morning session can also already mention about the potential of fintech in Indonesia. In terms of transaction value, it is estimated in 2018, the transaction value of fintech can be reached almost 21.6 billion US dollar. In terms of player, it is estimated in 2017 is about 188. And also, we strongly believe that the fintech has a good opportunity in Indonesia because Indonesia is supported by young people. In 2016, the estimation figure is about 24.9%. And also, Indonesia's economy is mostly consists of small medium enterprise that account almost 60% of our total GDP. Let's move to the fintech in financial system landscape. We know that the fintech has make big changes in the financial system landscape, and also these changes also make implication to the monetary policy, payment system, and macroprudential. It is issues that Bank Indonesia should be addressed. That's why in general our policy is with Bank Indonesia try to strike the balance between supporting technology, supporting fintech industry, and also at the same time we have to mitigate the risk. That's the main role of Bank Indonesia. And also in the next slide we can see the disruption from the fintech. At least there are three business model that the area of financial business which is disrupted by fintech. The first, payment; the second, fund transfer; and the third, personal finance. Let's move to the next slide. The concern of authority, especially Bank Indonesia as authority in monetary policy and also the payment system. We have strategic issues related to the fintech. We concern about the data privacy and also security. We concern with the monetary policy stability and financial stability, and also we concern with the consumer protection. As you can see in the next 12, Bank Indonesia try to make a balance, like I mentioned before. From the one side, we concern with the stability, monetary stability, financial system stability, and also monitoring shadow banking, underground economy, and also risk mitigation and customer protection. But on the other side, Bank Indonesia also should be encouraging the innovation in financial sector, boosting economic growth, including digital economy. That's why Bank Indonesia, since last year, we introduced new regulation regarding regulated sandbox. Regulated sandbox is like a laboratorium for the fintech, especially payment fintech, to test their new product, to test also their new business model. And the next slide, I will explain about this topic. Let's move to the slide 16. Why Bank Indonesia implement this kind of regulation? Because we realize that the speed of innovation result in many changes in all aspects, including payment system in financial sector. The shorter technology adoption rate has forced the authority to create policy in the shorter time frame. We realize that the technology is grow very rapidly, and that's why the authority, including Bank Indonesia, should catch up this development. we set up this kind of regulation, and we realized that the more technology, the shorter time frame for the regulation to make a regulation. Move to the next slide. The massive development in technological innovation and its penetration to payment system has forced Bank Indonesia to make effective policy in response to encourage further innovation while still managing the risk. So that's why this kind of regulation, we hope that Bank Indonesia can encourage innovation within fintech industry while conducting customer protection, risk management, and also caution principle. And second, payment system fintech which already registered and appointed by Bank Indonesia to participate in regulated sandbox. It is important to note that fintech company that can be joined with that can join to the regulated sandbox, one of the requirement, at least they should already have registered and in Bank Indonesia, and also their business model should be related to the payment, and also at least the fintech company that has risk that should be mitigated. This is the some of the requirement for the fintech industry that can be that can join to the regulated sandbox. We have maximum time period to participate to the regulated sandbox is about 6 months, and then we still give another period for the next month if necessary. At least there are 3 possible results from the regulated sandbox, whether the fintech be successful or fail, and also the third option is Bank Indonesia can modify the business model so that the business model can be comply with our regulation. And if success, the payment fintech can be granted by that license. If fail, the fintech company is prohibited to operate and advertise this product. And in the last part, maybe I running out of time. Maybe this is the last slide that I can show to you. There is a regulated sandbox mechanism. The first, fintech company do registration or reporting to Bank Indonesia. The second process, Bank Indonesia evaluate the product services, technology, and business model. The third process, fintech make presentation of its product, services, and technology or business model. And the next process, Bank Indonesia panel team will approve the fintech and its product, also the scenario to be tested in the regulated sandbox. And the 5, fintech operate in regulated sandbox using the approved scenario. So the scenario should be approved by Bank Indonesia. If success, they will get the license. If fail, it means that they prohibited to operate and advertise this product. I think this is my presentation. Thank you for attention. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Now it's Mr. Sani's turn, please.
Thank you, moderator, Pak Khalil. Assalamualaikum warahmatullahi wabarakatuh. Selamat siang, good afternoon, rakan-rakan daripada Kementerian Kewangan, Pak Suminto, Ibu Ayu, respected speakers, guests, ladies and gentlemen. I think before I begin declaration, saya akan menggunakan bahasa rojak ya. Sebab saya orang Malaysia, boleh menggunakan bahasa, tapi bahasa Indonesianya belum lancar lagi. Jadi akan campur bahasa dan English. I also wanted to share with you some inside information before we begin the presentation proper. You see, just now, with the moderator, Pak Khalil, we were discussing the order of the speakers. Siapa yang akan mula, siapa yang terakhir. Semuanya, all of us wanted to speak last. Semuanya mau yang terakhir. Because two reasons. Pertamanya, we don't want to speak after lunch, because after lunch everybody is sleepy. And second, we want to save the best for last. Jadi Pak Khalil begitu runcing sekali. How to decide who will be the last speaker? And of course, now you know I'm the last speaker already. The criteria that Pak Khalil chose is yang paling sedikit rambut. Jadi yang paling sedikit rambut, Pak Khalil kata boleh pergi akhir. Even Dr. Azmi pun tidak boleh lawan ya. Still cannot challenge me. So I think on that note, ladies and gentlemen, let me begin my presentation on fintech, Islamic finance, and regulatory issues. This is the overview of the presentation. Some of the slides I will go through very briefly because I think some of the earlier speakers have discussed in quite detail, and some I will pause for a while because I think it has some very important points for us to consider. This is just the growth of the the fintech digital platform. You can see the number in terms of bank accounts and the number of mobile phones, underlining the potential. Again, in this picture, you see how mobile phones, the number of mobile phones have increased even beyond electricity and access to electricity and clean water. Again, underlining the potential of using mobile phone for fintech, for financial services. This is some of the benefits of digitalization in terms of access to finance and some of the prediction by 2025, how using fintech, dengan menggunakan platform-platform fintech, we can increase financial inclusion and access to finance. Although I found a point from Dr. Azmi in terms of fintech being used for excluding, a very interesting point as well. So let's go to the sort of enabling building blocks for fintech untuk pemerintah ya. So one, ensure access to basic digital infrastructure. This is basically meaning the IT infrastructure, internet access and so forth. Second, providing enabling environment for innovators and entrepreneurs. Harus ada enabling environment untuk menggalakkan inovasi. And third, improve the regulatory environment, which is the subject matter that we will be discussing today. What kind of regulatory environment, what kind of regulations yang dibutuhkan, kalau di Malaysia diperlukan, tapi di Indonesia dibutuhkan ya, untuk fintech, masih belajar. Jadi ini antara, what I call this slide I want to stop for a while because it shows the philosophical approach to fintech regulation. Ada the philosophy, if you like, behind regulation. The first is what I call the laissez-faire regulation favored by fintech companies. And this is very pro-innovation, but maybe not so much on the consumer protection, where we allow fintech companies to grow, and then only then we start thinking of regulations. In fact, this approach was actually tried. China PRC tried this approach in 2015, but they then realized that in terms of consumer protection, this is not a very good approach. So they changed after 2015 to a more balanced and comprehensive regulation for fintech. The second is what we call the uniform regulations, where we treat everything as the same and we regulate everything using the same brush, if you like. This is maybe very good for consumer protection, but not very good for innovation. And it can in fact kill innovation. Some traditional industry, and if you follow the debate on taxi, on Grab, Uber, Gojek, this has been some of the dilemma. The traditional players prefer uniform regulation for fintech companies or tech companies to follow exactly what they are doing, because it sometimes can be anti-competition, which is being disguised as regulation. So sebagai regulator, what is the best approach? And the recommendation is a balanced approach, where you balance risk and potential innovation. You protect consumer, but you also help fintech companies to innovate, which means that similar activities, you don't look at the players, but you look at the activities and the level of risk that they provide to the consumers. Those kind of activities should be regulated in the same way based on risk supervision. But we cannot stop there. Tidak boleh berhenti di situ ya. Sebab the risk itself can change from one phase to another. So we must have a multi-level approach to make sure that the regulation can also change depending on the risk profile of the fintech companies. Because something that is too small today can become too big to fail in the future. So we must be dynamic in terms of the regulations that we adopt. This is, if we go to Islamic fintech, some of the definition of Islamic fintech, I won't go into detail, you can look it up. In fact, there's several definitions of Islamic fintech. Some of the examples of Islamic fintech we have in Singapore, Ethis Crowd, Capital Boost, Alami Sharia. We have in Indonesia, I think, Paytrend, although I'm not sure whether that's the one that has been registered with OJK. And in terms of innovative financial solution, fintech actually is very much in line with the Sharia structure of participating, musyarakah and mudarabah. So in that sense, if we can structure fintech companies to follow this kind of contracts, it's actually a win-win for Islamic finance and for fintech companies. These are some of the regulatory considerations that I think is very important. And remember the overarching goal of financial stability and consumer protection. First, yang pertamanya, supervisors have to ensure that financial institutions, fintech companies have robust governance framework. Second, from a risk management perspective, we must consider new risk, not the usual operational risk, but risks such as cybersecurity, fraud, theft, data privacy, and legal issues. These can all be significant risks within the context of fintech companies. How do we address this operational risk? And some example I gave here is like robo-advisory services, automatic investment advisory, portfolio allocation. Regulators need to build the capacity, upgrade capacity building, so that they understand how these activities work. How does the algorithm work for robo-advisory? And it is even more important in Islamic fintech, because we need experts who understand Islamic finance on one hand, Sharia jurisprudence, and we need understanding of financial technology on the other hand, because Islamic fintech requires understanding of both aspects. So if we go to sandbox, and this is a popular thing that you've heard many times, yeah? But maybe I want to go into a bit more detail of sandbox and its requirement. You know already what sandbox is. It's limitation on the number of clients, time limited, usually there's a few months, and a set of predefined exemptions. But why do we need sandbox? First, to keep regulation effective. And this is a very important point. Because when we talk about sandbox, many people will say that sandbox itu penting untuk innovation. Tetapi sebenarnya sandbox itu penting juga untuk regulator. From a regulatory perspective, because regulators cannot afford to develop the regulations first before you allow the fintech companies. In fact, sandbox is an opportunity for regulators to also develop the regulation sama-sama in line with the development of fintech activities. So this is important from a regulatory perspective. And also, of course, to mitigate risk, you have this flexible approach where you try to promote innovation, but at the same time limit the activity and the potential impact of fintech activities. If you look at the UK Financial Consumer Association, FCA, UK FCA, these are some of the questions that they ask before they allow fintech companies to use sandbox. First, yang pertamanya, the firm falls within the right scope. The planned new solution is designed to support financial service. Second, genuine innovation. Tiga, consumer benefit. Does it benefit the consumer? 4, is there a need for the sandbox? Is there a genuine need for testing within a sandbox framework? Dan kelimanya, background research. Apakah research yang telah dijalankan oleh fintech companies itu untuk aktivitinya? Have they taken the proper governance framework, risk assessment? So these are the 5 criteria that the UK FCA use as qualifying criteria for sandbox. These are some of the considerations for Islamic fintech. First, we need to consider the ownership at each stage of the transaction, not just in the beginning, but throughout the whole transaction. Second, P2P platform can operate based on Islamic contracts, either commodities murabaha, tawaruk, or even murabaha sale. So it is possible, and there are some examples like in Beehive in UAE. But when we talk of P2P, we have to ask some important questions. Does the investor, or in this case the lender, need to know the identity of the borrower or the details of the project that they're going to finance? And this is very important because in the initial part of P2P lending, the lender knows the project in detail. But if you look at more sophisticated P2P platform, in fact, the projects have been pulled together, the risk based on risk profile. So there are different risk profile, and then the platform operator only informs the investor or the lender on the different risk profiles and the potential returns for the different categories. That then creates the question of Sharia, whether the investor needs to know the profile of the projects in detail, the activities, before they invest. The last question, I think this is something that Prof. Azmi also raised. Who has the responsibility to make sure continuous Sharia compliance? Is it the operator or is it the investor? And there are pros and cons on both sides. These are some of the case studies in Malaysia. I won't go into detail. I think, again, Prof. Azmi have already spoken on this. Just for your information, the Securities Commission, Suruhanjaya Security, they have these guidelines on recognized markets. So if you want to know more detail on the Malaysia's regulation on P2P, you can look into guidelines on recognized markets. And these are some of the content of the guidelines, including the requirement to appoint Sharia advisor where Islamic capital market products are offered. In DFSA, in Dubai, DFIC, they also have some framework for fintech and P2P. Some of the points are here. In fact, they require the platform operator to give detailed explanation on the expected default rates of borrowers. They have proposed a limit, same like in Malaysia, there's a limit to how much retail investors can invest through this platform. And there's also other requirements in terms of not appointing a Sharia advisor, but having the endorsement of DFSA, and also having Sharia governance arrangements, including potentially appointing a Sharia supervisory board. Now, whether this is practical or not is a question that I think can be discussed. In Bahrain, the approach has been through a regulatory sandbox. There you can see some of the information in terms of the duration. It's limited to 9 months with an extension of 3 months. There's some limitations in terms of technical testing, innovation, customer benefit. So Bahrain is using the sandbox approach in terms of its fintech framework. I will just go briefly in terms of the roles of ADB. We can help the government in terms of looking at the regulatory framework for fintech. We can help the private sector in terms of promoting fintech champions within the private sector. In fact, ADB has a technical assistance at the moment, which is looking at some of these areas. And Indonesia is one of the countries included within the ADB technical assistance, and we would be happy to share with you the result once we have it. These are some of the programs we have in Vietnam and in Mekong countries. So I think on that note, I will end the presentation. I hope it has been useful to you, and I look forward to a good discussion after this. Exactly 8:765. I think I'm ending right on time, Khalil, so I should get another award from you later on. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
you, Pak Sani, and thank you for revealing our inside arrangement. We've had very fruitful presentation from the 4 speakers, and apparently there are some common threads, yeah, common themes that the speakers have been talking about. One is the continuous compliance. Yeah, do we typically in a capital market Sharia product, we conduct the compliance in the first period or the IPO period, and no one is really sure as time goes by. Is the, for example, in a bond issuance or Sharia bond issuance, is the proceeds being used in a Sharia fashion? Sharia compliance, no one is really clear about that. That is the first common theme. Dato Asmi mentioned that there's some discussion still going on with regard to Bitcoin, especially the more speculative aspects of it, although blockchain apparently is considered in some jurisdictions to be Sharia compliant. So this is an interesting development, because earlier, in the earlier session, there were some questions regarding the use of blockchain. So I guess as technology progresses, blockchain could be used, and if there's some examples that it is Sharia compliant, could be used in other territories as well. Pak Sarjito mentioned very detailed on consumer protection, and this is also a common theme among the speakers, also from Bank Indonesia, talking about the payment system and compliance. I think I would like to begin the discussion by talking about twin peaks. Typically in a financial sector regulation, you have prudential regulatory concern on one side and conduct on another side. Conduct apparently is being intensively or has been discussed a lot, but not much has been talked about on the prudential side. Professor Asmi mentioned very early in his speech that because at the moment Sharia fintech is such a small part of the market, or maybe even fintech as a whole is relatively small part of the market, no real discussion has been at least revealed regarding the prudential side of it, except mention of stability. Yeah, but maybe we can start with Pak Sarjito or Pak Amerizo regarding the Indonesian view or the Indonesian regulatory view on this. Is this going to be a concern? Probably, because fintech is only going to grow in the future. What about the systemic aspect of it? Can we envisage or can we imagine a time at one point if one P2P lender fails, would it affect the trust in the public investor on other P2Ps, for example? Is this something that needs to be considered from now on? Maybe Pak Sarjito first, Pak Amerizo, whoever wants to pick up. Okay, please.
Okay, thank you for the issue raised. I think I want to add more information about the regulation, our concern about the regulation. Please show the slide 13. Moderate, excuse me, can you use? In the slide 13.
Slide 13 of Pak Amerizo's.
Excuse me, can you show the slide 13? Mbak, Mas, oh di belakang, okay. Yeah, I think Bank Indonesia very concerned with the regulation framework, including the issues of the fintech. Even though we realize that the fintech technology is very grow rapidly, Bank Indonesia try to keep monitoring this development. If you can see from the slide, since 2009 to 2013, Bank Indonesia has already issued many regulations related to payment system and fintech. Since 2009, we issued regulation on payment instrument, card-based, and e-money. and also followed by the regulation on money transfer, regulation on customer protection, regulation on payment transaction processing, and also we try to mitigate the risk of money laundering and terrorism financing. In September 2017, Bank Indonesia issues the regulation on anti-money laundering and counterfeiting terrorism for non-bank payment system provider. And the last one, as I mentioned in my presentation, that we introduced the new regulation regarding electronic money. In this regulation, implicitly, not explicit, but implicitly, we accommodate for the Islamic payment fintech to issue e-money. At the moment, there is only one payment fintech Sharia, that operating under the Sharia principle. There is one company that issue e-money, and also at this time we are processing one of the fintech company that also operating in Sharia principle, that the company want to issue the electronic money. So I think the regulation, we realize that we have to catch up the rapid growth of this industry. So that's why we introduced the sandbox, regulatory sandbox, and we hope that, as the speaker said, that the regulatory sandbox is benefit not only for industry but also for the authority. I think this is the information that I can add regarding the regulation.
I'm trying to answer this because I'm not so sure if you hear clearly with that, microphone. The first question, there is a question about, is that the same P2P lending? What is different between P2P lending and crowdfunding? Actually, P2P lending is also debt crowdfunding, which is regulated by the OJK. And we have preparing the new also crowdfunding, which is equity-based crowdfunding or equity crowdfunding. So we have two, debt crowdfunding, which is P2P lending, and equity crowdfunding because the regulations are underway. The second question would be from Nuri probably, on can be the P2P platform be a lender? No. According to our rules, that P2P platform cannot act as a lender. So I'm a platform, here the lenders, here the borrowers. So I'm in between here. So also the regulation even not really clear state that there should not be affiliation between here the borrowers and the P2P platform, and also here also cannot be the affiliation of the P2P platform. That would be two questions that probably I can answer. Thank you.
Okay, maybe we can move on to the second question here that asked me. Maybe this is addressed to you.
Thank you very much. The question is about the case of Singapore, how they adopt the blockchain technology and how they regulate it. As I mentioned earlier on, blockchain is just a technology. It can be used for many purposes. It can be used, for example, in Malaysia as an example, it is used by a company called Hello Gold. Hello Gold is a gold trading platform where you can buy and sell gold on a cash basis, for example, and it is Sharia compliant. The technology used is blockchain. Blockchain can also be used, for example, for smart contracts. For example, I have seen one particular company in Thailand use it for the purpose of letters of guarantee letters. bank guarantee letters, so they use blockchain as an example. Another application of blockchain is for the documentary credit, the international trade, the import and export, where you use blockchain for that purposes. Another example that I mentioned also earlier on is by International Red Cross and Red Crescent in Geneva, where they have developed together with a firm using blockchain technology for the purpose of zakat collection and zakat disbursement for refugees. So those are examples. So blockchain is just a technology used, okay, and it can be applied for in a number of situations. For example, in the case of Singapore as well as Malaysia, all of these companies initially were under the sandbox regulation, and after they've completed the specific period and there was value to it, and it was then allowed to offer to the public. So to answer the regulation, again, a number of companies that use blockchain, they will be under sandbox regulation, and after they have met the specific requirement, as being mentioned, for example, by Sani earlier on, then they will be able to offer it to the public. So it is a technology, it can be applied to many cases, and for Islamic, people like it very much because it, it's able to, you are able to trace. There is an issue of traceability from end to end, so there is transparency. So people like it very much in the other countries. Thank you.
So as I understand it, blockchain is a technology to take care of the trust issue between either borrower and lender, or between someone who sends export-import. And if I remember correctly, Samsung is planning to use blockchain technology for its, what you would call it, its inventory management globally. So this is a technology which can be used for any purposes, including fintech and also Islamic fintech. Sorry. Maybe that's one idea or one topic that we can discuss.
If I can add, Mr. Chairman.
Yeah, please.
Another application that we see in blockchain now is the issue of halal certification. Because halal certification, you need to have the traceability issue. From end to end, it must be halal compliance. So one good example is a number of companies now are now talking about using blockchain for halal certification, end to end. And also for INSEAF, just a bit, we are working with IBM to develop a blockchain application for zakat and wakaf. So by the end of July, we should have our proof of concept. Thank you.
Okay, I open the floor to ask questions, if there are any questions from anyone here. If there are any questions, are there any from right, middle, center, or if no one, we can continue with the technology here. The idea here, I think this is for Pak Sarjito. I hope you haven't explained the last question on P2P and between OJK and Bank Indonesia. There seems to be some, I don't know, some coordination issue or something?
Khalil, I think I answered the question on the POJK 77, which is I told you before that a fintech platform is not lender, cannot act as a lender. Here, the lenders, here, fintech platform, here, the borrowers. So, of course, as a fintech platform, I cannot act as a lender. It's based on the regulation. It's not allowed to be a lender. It's clear on there. And the first question, which is now become first, Rupiah Plus. As you can read also in the OJK release before, that OJK Plus actually, not OJK Plus, Rupiah Plus, actually, there is a violation on the collecting. Some of the investigation, we are doing it, but who is actually doing wrong. So according to the OJK rules, that financial service provider or whoever cannot, collect their customer in such way which is not according to the regulation. So we are not allowed to be using a debt collector, which is rude and harsh, and sometimes even dangerous for the customers. So Rupiah Plus, some of the investigation also found that some of the consumers in that actually did not have a good intention. This is according to the release that I read just a moment ago. So basically, all financial service providers, according to OJK rules, including the fintech platform, has to follow all the rules and regulation. Thank you.
I have a question which has been bothering me for some time. Yeah, this is also in other territories outside Indonesia, maybe of some concern. This is regarding the use of Bitcoin, first as a currency, and then second as an investment, as a speculative commodity. If I remember correctly, a couple of weeks ago, the commodity regulator in Indonesia, Bapepti, issued a regulation saying that Bitcoin can be used just like gold or other kinds of commodity contracts for speculative purposes. At the same time, Bank Indonesia is saying that Bitcoin cannot be used as currency. So this is the same commodity or the same stuff which has different uses. Yeah. So that is one coordination issue over there. The other part of this is having to do with technology, because all of fintech is based on technology platform, which is to some extent regulated by another ministry, which is the Ministry of Telecommunications. Yeah, and of course Ministry of Trade, Ministry of Telecommunications. My guess is they are not as advanced as the financial regulators in fintech. Yeah, but they do have their jurisdiction and they have a role to play. Maybe you care to comment? I'm sure there are no one from Ministry of Trade or Ministry of Information here, so feel free to speculate on this evolving regulatory coordination issue. I don't know, maybe Pak Amerizo first? Maybe Dato Asmi and Pak Sani can comment later. Yeah. Thank you.
Yeah, thank you. Yeah, we raised the issues regarding cryptocurrency, especially Bitcoin. Because Bank Indonesia as a regulator in payment system, we are concerned about the payment system. So that's why in the context of cryptocurrency as the medium payment of exchange, we strictly prohibited the use of Bitcoin as a money. This is our area of our authority. But on the other hand, we realized that Bapepti at the same time also issue regulation concerning the Bitcoin. And we make analogy about the issue. Maybe Bapepti, if we analogy like a race car, Bapepti is like they just focus on the throttle, they push the speed as much as he can. But at the same time, Bank Indonesia should be focused on the financial sector stability. That's why, on the one hand, Bank Indonesia only concerned with the payment system. We strictly prohibit the use of the Bitcoin for the medium payment. But I also realized that in the future, I think between the authority, we need to make synergize and coordinate more closely, and then we talk about the issues, the current issues, in order to respond more properly, and then between regulator. I think this is my comment.
Okay, thank you very much. Okay, very interesting. If you look at I'm not a Sharia scholar, but I've been following the debate on Bitcoin. As we said in English, the jury is still out there, which means that the debate will continue in terms of whether Bitcoin is currency, mal, or not. A number of discussion has been made, even in the context of Malaysia, looking at Bitcoin particularly, or cryptocurrencies generally, and then you're looking at different kind of cryptocurrencies. As far as the Sharia scholars are concerned, majority would say it is not money. I would say that's the majority would say, I'm not saying consensus, but the majority of the Sharia scholars, even in Malaysia, are saying that it is still not accepted as money. It's the closest to money is what they call, it is a token representing something. Okay, but it is not money at the moment. Therefore, can it be used for trading? Well, within a small circle of people who accept it as a token, it's possible. What is the example of token? Token is an example would be if you go to a theme park, you exchange your money with a token, and that token will be used for certain rides and so on. So that is the closest opinion so far as Bitcoin is concerned. But of course, from the regulator's point of view, even in Malaysia, Bitcoin is not accepted as money. Thank you.
Thank you. So I think what we agree on is that, in fact, if we look at regulations for Bitcoin, I would say the significant majority of countries do not accept Bitcoin as a form of formal currency. Certainly the central banks don't. So in that sense, Bank Indonesia is definitely doing the right thing. Now, as an investment product, it's a bit more difficult to decide one way or another, because the issue is volatile. You know, the prices go up and down significantly, but is that enough of a reason to ban it as an investment product? Because there can be many other instruments which maybe not as volatile, but can display those kind of uncertainty. Certainly from a consumer protection angle, you want to make sure there's adequate disclosure, that the investors know what they're getting into, the investors know the risk involved in investing in cryptocurrency or Bitcoin. So whilst we can discourage through literacy, through investment education, I'm not so sure about banning Bitcoin completely, as if you can term it as an investment product. Unless, of course, we go into the realms of financial stability and those kind of issues, then that's a different consideration. The other point that Khalil brought up is in terms of coordination between regulators and other ministries. Again, this is not peculiar to Indonesia. In most developed jurisdictions, you see the financial authorities are way ahead of other regulators in terms of fintech. So I think clearly what is needed is better coordination, especially if you look into the point, Khalil, that we mentioned just now about the use of mobile phone. How the use of mobile phone is in fact one of the main channels for fintech companies to spread their activities. And obviously mobile companies are regulated by Ministry of Communication, for example, so there needs to be coordination from the financial sector aspect and the vehicle, the channel, how fintech is reaching consumers. Only then you will have a complete ecosystem in terms of regulations.
Sarjito, I would like some final comments. We are entering the last parts of this.
My final comment on this conference is that fintech actually must be able to make the society socially and economically better off. And if fintech cannot protect the consumers, it's also very dangerous. We have been discussing about Bitcoin and all those kind of things. The fact is that our society invests in an instrument which is not being allowed by the Indonesian government, but we cannot protect them. And as OJK also issue rules on P2P lending, and we are going to issue also rules on the equity crowdfunding. And as Deputy Commissioners on Financial Education and Consumer Protection, we are going to stress at any time on the how those products can really protect the consumers, because we cannot just make everything easy, but at the cost of consumers. Thank you.
Bank Indonesia as that authority in the payment system, we support the development of Syariah payment fintech. We welcome to the industry if we want to join to the regulatory sandbox to test the product, to test the business model. And on the other hand, Bank Indonesia also try to keep monitoring the risk, that related to the new product or the new business.
Final word, as I mentioned earlier on, Sharia perspective on fintech is huge. But let me just go on into the investment side first. I think on the investment side, as I mentioned earlier on, there must be a continuous Sharia evaluation and Sharia review to ensure that the particular fintech applications meet Sharia requirements, not only from the beginning, but throughout the whole process. Thank you very much.
I think just my final comment, again, save the best for last, yeah? I think just my final comment is that in terms of Islamic finance and fintech, clearly there's a potential. And I think one of the topics tomorrow is on competition or collaboration. Clearly there's a lot of collaboration and opportunities for Islamic finance. The issue is how do we regulate it in a way that is Sharia compliant, that is continuously Sharia compliant. But also I would like to add, I think the burden should not just be on the regulators. When we talk about consumer protection, sure, the regulators can have a proper framework, can have a proper disclosure, even compensation if necessary. But I think the responsibility is also on the consumer side. We also need to learn and understand what we are investing on. When we talk about Bitcoin, everyone was super excited. It was almost like a trend. Nobody wanted to really read up on what is Bitcoin, what is cryptocurrency. Often we look at just the returns, the potential returns, and we get overexcited. This is not a new thing. Even 10, 15 years back in Malaysia, we had a lot of financial scandal based on promised return. We call it Parmentelo, where they promise you 40, 50% returns if you invest in their so-called companies. All that has happened is we have moved that greed from traditional financial intermediaries to technology-based financial intermediaries. So the point here is, I think, as consumers, don't just look at the numbers and think about potential returns, look at the risk, understand what you're investing in, and if you have that collaboration between regulators and consumers with literacy, education, fintech is something positive that we should embrace.
Thank you. Philosophically, the question is fintech something new or something old? Is there anything new under the sun? Yeah. Are we just moving from paper to computer, for example? Yeah. And my suspicion is, or my speculation is, it is something new. Yeah. For example, previously when we were doing banking in the traditional way, the systemic risk, although it already exists in some fashion, is quite limited. Yeah, you read it in the newspaper tomorrow that BCA has failed. Or you read it in Medan, for example, where I grew up, you have Kompas the day after printed. So there's a 2-day delay between the bank collapse in Jakarta and you rushing to the bank in Medan. But now, within 10 seconds of a bank collapsing in Jakarta, you in Papua already know about it. So there's a fundamental shift in systemic risk. My suspicion is fintech and this new development in technology means there is actually something new, something happening. Yeah. Therefore, the regulatory perspective or the regulatory regime also needs to change. This is work in progress. We are only at barely scratching the surface of this. For example, we heard earlier that between the ministries that are in charge of the financial sector and people in charge of telecommunications, for example, needs a lot of coordination. Yeah, that's only the beginning part of it. Yeah. And also Bank Indonesia as the payment system regulatory agency and Bapepti as the regulator in charge of commodities. Yeah. The same stuff can have different meanings to different regulators. Yeah. So I think this is something that needs a lot of attention and a lot of work for the regulators to continue forward. And I'm sure in the next conference or any other conference down the road, we are going to talk about the same thing until it is completed. Unlike banking, for example, it's just very well developed. Regulation in this area is only barely scratching the surface. So I think, thank you for the speakers and your patience in the audience. I give the floor back to the MC. Thank you.
Thank you once again, Mr. Khalil Reuters, for leading a comprehensive and fruitful discussion panel. We will have a photo session and a token of appreciation. Please remain at the stage. Now we would like to invite again Mr. Arif Baharudin, Assistant Minister for Financial Sector Policy, Ministry of Finance, to present a token of appreciation to the panelists and moderator. Thank you, Mr. Arif Baharudin, the panelists and moderators. Distinguished guests, ladies and gentlemen, our next agenda is called for paper parallel presentation, which is organized in conjunction with this conference. We have selected 9 papers to be presented today. Parallel presentation will take place at the 3rd floor, Toraja Room B, D, and E. List of presenters and topics will be displayed in front of each meeting room. We invite all of you to join the parallel presentation at 3:30 p.m. We also would like to remind you that we will have a welcome dinner with cultural performance taking place in this ballroom, and we kindly request all of you to be here at 7 p.m. And now, we have time for a coffee break that will be served on the 3rd floor. Please enjoy. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh. Bapak Ibu hadirin Annual Islamic Finance Conference, kami informasikan kembali setelah ini kami akan mengadakan parallel presentation yang akan diadakan pada lantai 3, ruang Toraja, ruang nomor B, D, dan E. Dan di depan ruangan akan tersedia list of presenters yang akan kita mulai parallel presentation tepat pada pukul 3:30 waktu Indonesia bagian tengah. Kami juga ingin menginformasikan nanti malam kita akan bersama-sama kembali ke ruangan ini untuk melanjutkan acara welcome dinner dengan cultural performance yang akan diadakan di ballroom tempat Bapak Ibu sekalian berada pada saat ini. Dan acara tersebut akan kita mulai pada pukul 7 waktu Indonesia bagian tengah. Kami undang kembali Bapak Ibu sekalian untuk coffee break yang kami sediakan pada lantai 3 di hotel ini. Dan selanjutnya kita akan melanjutkan dengan parallel presentation. Sekali lagi, terima kasih untuk perhatiannya.
Bank has been a symbol of trust, credibility, strength and stability for over 44 years. As we build on our successes of the past, we look to the future, a future of growth, empowering communities to drive their own economic and social progress at scale, investing in the infrastructure that enables them to fulfill their potential, building collaborative partnerships between public and private sectors, communities and nations, supporting science, technology and innovation-led solutions which aid the UN Sustainable Development Goals. As the ISDB embarks on the next chapter of its evolution, our brand is evolving too. Our new identity is an evolution, not revolution. Its rich green to blue color represents the bank's Islamic tradition.
Ladies and gentlemen, that was the third annual Islamic Finance Conference 2018 for Session 2. Open Session 2, we had a lecture from Professor Dato Asmi Omar, President and CEO of INSIF, with a topic of balancing innovation, competition, and consumer protection for financial services institution in digital era. After lecture, the conference was followed by panel session 2. First speaker for the panel was Professor Dato Asmi Omar with a topic of regulatory framework on Sharia-based fintech current issues. And we had Ameriza Maruf Musa, Deputy Director Bank Indonesia, with a topic of regulatory sandbox and payment system in Indonesia. Followed by Sarjito, Deputy Commissioner Otoritas Jasa Keuangan or OJK, with a topic of fintech and consumer protection in Indonesia. And the last speaker for the panel session 2 was Muhammad Sani bin Muhammad Ismail, Senior Financial Sector Specialist, ASEAN Development Bank or ADB, with a topic of regulatory issues in financial technology. Once again, we would like to inform you that you can watch all video of the session 1 and 2 of this conference by accessing KemenQ Learning Center on www.klc.kemenq.go.id or by download KLC apps on Google Play Store. And also you can visit our YouTube channel BPPK Kemenq RI.